Hi, and welcome to the market alert for Wednesday the 29th of April 2015. And starting off in the 5-minute chart, we're going to do something different today. We're going to have a look at how the market reacted to the consumer confidence, which was released yesterday, the first high impact news item to actually occur during the trading session, which of course I warned about yesterday. So you can see already from the chart here, by the time I get to the desk, I was a bit late getting here yesterday afternoon, the market already had the news, and we see the market falling sharply. And the reason for that is that the consumer confidence figures, which should appear on the screen any time now. In fact, I've actually gone past them, so let me just wind back a bit. There you go. So the consumer confidence figures came out at 95.2 instead of 102, and of course this gave the traders the excuse that they've been looking for, and that's to mark prices down, which you'll see there. You can see prices being marked down sharply, and this shakes out the weak longs, as they call it. So all of the buyers that were trading the market beforehand, this gives them the opportunity to shake them out. But as I have said on numerous occasions in the market alert, and I will continue to do so, they do not want this market to go down. Bear markets don't exist according to the Fed anymore. The markets will continue to rise. We know that's nonsense, and at some point it will turn, but at the moment they want the market to keep rising. So it's just a matter of waiting for the market to show its hand following the markdown. It's certainly not a sell-off, because we can see a bit of selling there, we see buying pressure there, and then we see also a bit of an increase there, but now you can see everything has disappeared as far as weakness is concerned, because the volume has dropped off markedly. So whatever selling was around has since disappeared. So I'm just going to speed things up a bit. We see the market moving back up, and we can see prices playing with the psychological level there of 17,950. And as we move on a bit, you can see the volume building there. Notice how this is now greater than the previous bar. The selling's disappeared, and we start to see an increase in volume to the upside there. So prices have closed above the 17,950. We have a PTI. The PTI is marked up, and now it's a matter of waiting to see if the market can fill it. So prices are sideways, and this is an interesting price bar because we're above the psychological line and the volume is the same, but the range is narrow. And at this point I thought we might not actually see this order get filled, knowing that the market was going to go back to the top where it had come from because of what's in the background in the daily chart. I was thinking, well, maybe they're going to reverse the market, retest it first, and then move higher, but they didn't need to, as you'll see in just a moment. So again, you can see the volume building in this price bar, and now you see it touch the entry price. Prices come back, but they stay above the psychological level, and again you see this time you can see the volume is the same as the previous bar now, and we're starting to make progress. Now this trade I wanted to hold because having moved the market lower, shaken out the weak longs, this market was destined to go back where it came from. There's no doubts about it because of what's in the background and what I've been saying in the market alert over the last few weeks about the market wanting to go back and retest the all-time highs. So even bad news, economic news, is not turning this market to the downside. It never has done. It hasn't done since 2008. It is used to mark the market down. Once prices settle, the selling disappears, shake out the weak longs, the market turns around and goes back to the upside. So now I've just put back on the PTI line so I can see where we're at. We've got 40 odd points, and I'm going to fast forward here to this point. The market has gone through the next psychological level, which is the 18,000, and it's left this rising low behind. So what I've done is mark 50% below this, and this gives me around 40 odd points in this trade should the market come back below this. But I'm still convinced that the market's going to go up and go back to where it came from, again for the reasons I've already talked about. So there we see the market going up again. We're heading now towards the next psychological level, which is going to be 18,100. We're sitting at 84 points on the trade, and we can see the volume increase in there as well. It isn't quite a professional buying bar, but the range of the bar and the increase in volume is consistent with it. It's just where the average is at the moment. We can see from the previous bars that we've got that sort of buying coming into the market there. And the market, once it's gone through a psychological level, will trade sideways initially unless there's something to really drive it. And here we see prices then struggling a bit. And what I've done now is move the stop up from underneath the 18,100 to this next rising low, which is 18,051. So should the market come down to this level, it will take out the trade as well. But I'm still convinced the market's going to go up to this level, so that's why I've not taken the profits as yet. You can see the market coming down, and it trades sideways for a moment or two, and now we go into the quiet part of the session. And as most of the traders leave for lunch, you can see that this leaves those that are left behind to move the market to the upside there. And at this point we're on 136 points. We've achieved the objective. We're back where we started. It's a V-shaped correction. You can see this sort of V on the chart there. And also at this point we're going into the quiet session, so it's worth just taking the money off the table and waiting for either another trade or frankly calling it a day. 136 points is good for the day. So now you'll see we'll move on for the later part of the session. If I can get this to move, there we go. So the market trades sideways, and you can see how the psychological level is forming a resistance here, and price is trading sideways. We get a sell signal. The question is, do we take the sell signal or not? We've got a strong move in the background, a bull market in the daily chart, a strong market there as well. Any trade to the downside following this sort of return to the upside is going to be short-lived, and this is why when you see later on in the session we get another sell signal. That one wasn't filled within the 3 bars. You can see price is trading above the 18,150 there, but we're still in that sideways range and flirting with the 18,100. You can see now we've got a PTP and a triple X. Same rationale behind whether to take this trade or not. We're still coming back above the 18,100, and that sell signal is cancelled as well. So coming out of the quiet session we have a triple X, and this one is filled, and the market manages just to go down to the 20-point scalp there. Now what's important here, had you taken this trade, we've hit the scalp, we've got support over on this side. You can see all of these low points here. Not only that, the strength in the background, and more importantly you have no selling as this market's moved down there. And now you'll see price is finding support and coming back to the upside in just a moment. So prices are now sideways finding support. They don't want to move lower. The volume's dropped off, and now we see prices returning to the upside. The 18,100 is causing a problem once again, and now we have a potential buy signal. We've got the strength in the background, but we've already exhausted the move, don't forget as well. We've had 100 and odd points move from the initial trade, and now this is the latter part of the session as well, so you have to be careful. So if you get 20 points out of a trade like this, you want to be glad, and you also want to be reducing the risk as well because it's late on in the session. We've got a counter signal there, market's holding above the psychological level, and then we see prices not being filled to the short side within the 3 bars. Price is coming back, and now we have a potential sell signal there. You can see how the market just dropped down sharply, and there you see another signal towards the end of the session. So here you can see why I mentioned that if you've already got 130 odd points for the day, why you really don't need to be sitting at the screen to try and take a few points towards the end of the session when the market's already factored in the news, use the news to manipulate the market and move the market back to the upside there. So hopefully that will give you an insight into the thought process of holding a trade, how to manage the trade, and what to look for in the trade as well. So what we'll do now is move on and take a look at the daily chart, what's out economic news wise today, and a quick look at the implied volatility before we conclude. So we're in the daily chart, and you can see the market is attempting to move around. I'm just going to remove a few of these lines and also just show you what's going on as far as this market is concerned. You can see we've got the all-time high going back to February, and then we had an attempt here, the market came back 3/4 of the way, but since we've got this sort of resistance going on. But what you will notice, if I can find the line tool, which is going to be in markup, and if you notice we've got this sort of shape going on. I'll just draw that in, and then across from here. And what this is known as is an ascending triangle, and you can see that the market's making these rising lows. We had a bit of a shakeout there, and what it's doing is putting pressure on the top, and as this works its way, eventually it will burst through to the upside and then make a new all-time high. So that's the pattern in the market at the moment. That's what generally happens. If it breaks through this side, then the market will move lower, and of course that's going to be news dependent on whether the market actually breaks to the top or not. But overall this market is a bull market. It's a buyer's market. You can see if you look at the longer term charts that this market is in a very strong uptrend. So let's have a look at the news today. We have got the FOMC this evening, and there's nothing else apart from crude that's out at 3:30, but we just got one before that. So I see their pending home sales out at 3 p.m. Now this is forecast to be actually lower than the previous 3.1 down to a forecast of 1.1, which is not good. So what we saw yesterday was the shakeout to the downside, the market coming back. However, that said, today we do have another variable to take into account, and that's the FOMC Fed's funds rate, which is out, and the statement at 7 p.m. this evening. So the best guess for today is that the market's going to do its usual thing, volatile for the first half an hour, then going to be dictated by the pending home sales, whether the forecast is beaten. If it is beaten, then, and there it may be a case here actually, just thinking about this, we've got 3.1 and they've put the forecast down at 1.1, so if it comes out at 2.1, which is 1% lower than the previous, that's good news apparently. So that will be used then to move the market back to the upside. But you certainly don't want to be in the market at 7 p.m. because there's this speculation at the moment that the Fed are going to actually think about and consider increasing interest rates. And it's interesting because they can't afford to increase interest rates because it's going to impact on the interest payments on the debt, etc. So looking at this again, this is manipulation in my opinion, you know, to actually put the forecast down at 1.1% and have the previous at 3.1 is just absolute nonsense. So again, I wouldn't be surprised to see this forecasted figure come out better than forecast. And also by keeping the pressure on the economic news items looking bad, that avoids the decision to actually whether to increase interest rates or not as well. So it's a hard one to call because of these few variables, but again, the buy side for me would be the better side, but don't expect a lot after 4:30 p.m. either, because the market is generally going to go in a sideways range waiting for what Yellen's going to say, but expect a lot of volatility after the statement at 7 p.m. And finally, on the implied volatility, yesterday 12.09. Let's just refresh the chart, see what yesterday's was. 11.41. No surprise there as the market moved up. So the implied volatility dropping off, as is the historic as well. Any big up move now will see the blue line cross the yellow implied line again. Prices moving on to the all-time high, and that of course is dependent upon what Yellen has to say later on today. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Let's hope that the market has this nice volatility it's got and trending prices that we saw yesterday. That seems to be, well, hopefully that is what's returning, because that's how we make the large profits, not stuck in the low volatility sideways trading ranges. Okay, thank you for your support and for watching. See you in the next one.